the euro was lifted as European Central Bank President Draghi hinted that the central bank could buy mature bonds of up to 3 years, and in such cases, he's not at risk of breaching EU rules. Draghi said in a closed hearing in the Economic and Monetary Affairs Committee of the European Parliament that bonds of maturity up to 1 year, 2 years, or even 3 years will easily expire. Hence, he noted, there is very little monetary financing effect. Under his plan, the ECB would buy bonds together with the European Financial Stability Facility and European Stability Mechanism to relieve the pressure of the high borrowing costs of Spain and Italy, based on some conditionality of reform. Draghi emphasized that the central bank cannot pursue price stability now, because of a fragmented eurozone. And all this has to do very much with the continuing existence of the euro in a moment when the rest of the world has now started to question the existence of the euro. Moody's lowered the outlook of EU's AAA long-term bond rating to negative, from stable, yesterday. The rating agency noted that it is reasonable to assume that the EU's creditworthiness should move in line with the creditworthiness of its strongest key member states, based on the negative outlooks for the UK, Germany, France and Holland. The AAA rating was maintained because of the bloc's conservative budget management and the creditworthiness and support provided by its 27 member states. But the EU is at risk of a downgrade on deterioration in the creditworthiness of EU member states. Also, weakening of the commitment of the member states to the EU and changes to the EU's fiscal framework that led to less conservative budget management will be credit negative. The Aussie recovered mildly after, as widely expected, the Reserve Bank of Australia kept rates unchanged at 3.5%. The board judged that current monetary policy remained appropriate and expects inflation to be consistent with target, and growth close to trend, even though a more subdued international outlook than was the case a few months ago. Domestically, growth was supported by very large increases in capital spending in the resources sector, and was firm in the first half. The unemployment rate has remained low. Inflation also remains low, but the carbon price will affect consumer prices over the next couple of quarters. Globally, the bank noted that China's growth remained reasonably robust in the first half, even though recent indicators pointed to some uncertainty. Asian growth is being dampened by moderate Chinese expansion and of course Europe. The bank also noted that markets for key natural resources are adjusting accordingly and terms of trade have declined significantly. The exchange rate has declined over the past month or two, but remains higher than expected. On the data front, UK-British Retail Consortium Sales Monitor dropped 0.4% year-on-year in August. Japan's monetary base rose 6.5% year-on-year. Swiss GDP and UK PMI construction figures will be released in the European session along with Eurozone PPI. The US ISM Manufacturing Index will be the main focus today and is expected to improve slightly to 50 in August. Euro-Yen daily outlook recovering mildly but staying in range below the 99.18 level. Intraday bias remains neutral for more consolidative trading. But again, the pair is staying comfortably inside a near-term rising channel and thus, a further rally is still expected. Above 99.18 will target 38.2% retracement of 111.43 to 94.11 at 110.72 next. On the downside, break of the channel support, now at 97.79, however, will indicate that such rebound has completed and will flip bias back to the downside for 95.71 support for confirmation. In the bigger picture, there is no clear sign of a reversal yet, and the downtrend from the 2008 high of 169.96 could extend further lower to the 90 psychological level. However, as we are favoring the case that the pattern from 139.21 is a falling wedge with bullish convergence conditions in weekly moving average convergence divergence. A fall from 111.43 should be the last leg in such a pattern. Hence, we'll expect strong support above 88.96 to contain the downside and form a major bottom and bring a reversal. So, focus will remain on a reversal signal. Meanwhile, a break of 101.62 resistance will be an early sign of medium-term bottoming and will turn focus back to 111.43 key resistance for confirmation.